Let me know if you can see the slide I'm sharing. You can see the slide, right? Am I still connected? Can you see the file I'm sharing? Okay, let's proceed. Morning everyone, and happy New Year. I welcome you to your year of profitability, right? Year of profitability, and from profitability, you can excel, you can do all things that you so much desire. Okay, a quick one. For those that have sent me message and maybe I haven't sent you a response, okay? You can just send me a hi or anything, like just tagging the question. I'm trying to reply both on Telegram and on WhatsApp, and trust me, it's not that easy. But I'm trying my best to reply everyone. Okay. So, and I want to say one word of advice for the newbies. When we started, I told you guys that it might not be easy. Actually, for the newbies, yes, that's actually the truth. It might not be easy because you will find it so strange that this thing is quite hard. Okay, you find it like it's quite hard. You are not grabbing it. See, one way or the other, all trader that you saw out there, any trader you are seeing out there, like you are looking at, you are looking up to, all starts from you. The same way you start right now. That's how they start. So because it's the trading, it's something I don't know how someone has told you that how trading looks like, that you think it's something that you can just come and just no. Assuming it's that easy, everyone will leave their work and be doing trading. Are you with me now? Like everyone will leave their 9 to 5 and be doing trading back to back because no one is ready to stretch his or herself. So if you actually want something, and if something so great won't come easily like that. Never. It's not. I don't think it's always possible like that. It's rare. And when it comes to this class, there's a way our brain is wired because it's wired differently. The way some people we grab some things. For example, now maybe you have exam in 1 week. The way some people will grab it one day before exam, someone would have been reading for like 2 months earlier or 1 month earlier, be trying to assimilate some things. Yes, I'm recording. To assimilate some things, and he's not getting it. So that's why I said it might take you time. It's not about the rush. See, as a newbie, just ensure that you get the basic very well. See, advance is not running anywhere. Advance is not running everywhere. Okay, advance is not running everywhere. Don't think maybe um because the life advance is starting soon, you are going to miss out, and that's why most people are getting panicked. I'm very sure you think you are not getting the basic, the advance is nearby, you are panic, all those kind of things, that you'll be left out. You won't be left out if you actually study what you are going to learn. Okay, I don't want to take much of our time, but trust me, I've been here. If I show you my charts back some years back, you will laugh that is it really my chart? Even if I look at my charts around that 2020, I'll be laughing that am I the one that draw this nonsense? Okay, it might look like nonsense now, but it will all make sense later. Okay, so let's proceed. Today we want to talk about entry types and then risk management. Okay, we want to talk about entry types and risk management, and I won't take much of our time actually. I won't take much of our time, and it's quite simple. And you have to know the idea behind this basic class. Most of the topics behind this basic class, I'm trying it so that you will understand the concept of what we are doing. By the time you enter the advanced class and some words are coming out, you'll be able to assimilate them. You can see that the way I'm diving into theoretical, I'm going into technical also, so that we understand it very well. Like I emphasize very well when it comes to theoretical, and when it comes to technical aspect too, I make sure I emphasize so that we understand what we are doing. Okay, now entry types. We have talked about we've talked about structure, we've talked about change of character, premium and discount, PO high, all those things are confluences. Okay, now just follow me. Follow me. Don't just watch or just listen like just listen sick. Follow me heart to heart, and you understand what I'm saying. Confluences. If you send me a chart, let's say you send me a chart, and I ask you, what are your confluences? Okay, that means I'm asking you what are the things you saw before you are marking, not just mark trade and you just send it. What are the things you see or you saw before you mark out or before you take this particular trade? Now, those confluences is what you want to look at when you are entering a trade. Because from today's entry model, tertiary entry model, I'm going into risk management also. Okay, now it means what are the confluences? If now you learn entry and the first thing you go onto the chart is you are just going to the chart and apply entry model. Your confluence is not complete. Because where is your structure? Where is your PO high? Where is your discounts and premium and discount? Okay, I hope I'm not rushing, guys. Okay, where is your premium and discount? All those things are confluences, things you look at before you enter a trade or before you exit a trade. Those are confluences. These are the things you want to see. So now let's say for me now, I want to see 5 things before I enter a trade, and I saw 3 things. But my rule still says that if I see these 3 things, I can still enter the trade. But with these 3 things, it means my probability or the probability of that particular trade holding or going my way has reduced. Are you getting it now? Because market is not like a manual. It's not like a manual that will just present itself over time like that, like that, like that. It can come in different pattern. Like it's still the same thing, that the same entry model you want to use, but market will come in a different language. Like you just want to interpret it. I don't know how to explain this more, but try to get me. We just want to interpret what the candlestick is telling you. It's a language. You just want to interpret it, and when you're able to interpret it, see, you are getting good. It's not a one day this thing like that. It just turned a pro or suddenly. Okay, it's gradual this thing. Now, without wasting much of our time, entry. Entry type determine how and when traders enter the market. Choosing the right entry improve accuracy and reduces risk. Okay. 2 primary entry approaches. 1, aggressive entry. Now, when we are talking about aggressive entry, it means you saw a particular zone or levels, that this particular zone or level is what you marked out. Let's say, for example, you mark out your PO high and you refine it either with your premium or with your discount. Then you are looking for possible buy at that zone or possible sell at that zone. Then you enter the trade at that particular zone. That is aggressive entry. You are not confirming either that zone will hold or not. Do you understand it now? You are entering aggressively because you don't know if that particular zone will either hold or not. See, that's why most of you guys see, if you join the morning class, you can try to join the night class too. Or if you can't join, you can watch both recorded versions, because there are some things I might say here, I might not say in the night, because you know it's not AI. So I am human being, so I can miss some things up. Okay. So now, see, some will be like, I have my PO high, market will not come, market will just do something like this. See, market creates new things here. Why not follow this one here? And you are still waiting for this one here. Okay, now this is a discount zone. You placing your entry here, okay, and then you want market to just move like that. Is you are entering aggressively. Because this particular higher low that you are looking is a strong point and you are marking out your discount zone, market can just break it. Market can just break it. Okay, see, both aggressive and confirmation has their pros and cons. Okay, so you will know the one that you actually want to do. And how do you know these things? Is based on practice. If you ask me, Steve, which one do you like mostly? I love confirmation. I love using confirmation. I don't like entry just a zone and then I just tap in like that. No way. I love using confirmation entry before I enter any particular trade because it's more of like two-factor authenticator. That's how it looks like. Okay. There are some entry model that doesn't require you maybe you mark out a zone or anything. There are some things that you will learn that might be different. But when it comes to me, regardless of the level, regardless of the PO high, I have different confirmation approaches that I use, different time frame series before I enter them. Okay, and all these things is true practice and knowing what you are doing. Okay, confirmation entry is price approaching your entry, and you want it to give you a particular confirmation before you enter. Okay, let me use for example now. For those that study the candlestick Bible, you will see that there are different types of candlestick candlestick that was shown there that maybe, for example, you have the hammer. You know, the hammer tells you that the market is about to to um to change the direction. Okay, maybe market was bearish and then market creating forms an hammer. Here's how it looks like. Market was selling like this, forming like this, and at this zone, market creates a candlestick like this hammer. You know, it tells the psychologists that buyers is about to get into the market, right? Because this body of the candles actually reached here, but it was dragged upward to this extent here. So buyers are about to take over. Something like this is like a confirmation on its own, but this is not what we are using. But I'm just telling you. You see that these are the benefits of the candlestick. You understand that these are the scenarios that this candlestick is trying to tell you about the psychology of all this movement. Okay, now aggressive entry. Nation, entering the trade at the very first sign of a setup. Very first sign of a setup, you saw a discount zone, you want to enter straight away. That is aggressive entry. Okay? That is aggressive. You are not using confirmation, you just want to enter just like that. Pros, potential for an excellent risk to reward if the move continues. Cons, higher risk of false signal due to limited confirmation. I believe we all understood what pros and cons means. Pros means the advantage and cons the disadvantage. And I said sometimes lower risk to reward. Aggressive entry sometimes gives lower risk to reward. Meanwhile, you I that I use low confirmation entry, I can have higher risk to reward, and I can even exit trade before your higher time frame deliver your full TP. Because if your zone is 1 hour time frame, the setup you mark, you know, if you mark your discount zone maybe like 1 hour or 4 hours or anything, if you mark it and you enter that particular trade, your TP will be very high because this SL is quite big. Compared to me that goes time frame like 15 minutes, 5 minutes, and enter that trade, I would have exit before you even see 1:2. I would have seen like 1:3, 1:4. I'm out already. Okay, those are the things about aggressive and confirmation. Same thing about confirmation here. Revelation, waiting for additional confirmation before entering a trade. Entry is taken after the initial move shows strength, often involves lower time frame for a refined entry point, e.g., candlestick confirmation. I've used that earlier. I've cited that as an example, or structure confirmation. can provide an even higher risk to reward ratio when the move is confirmed. Reduce the likelihood of false entry. Cons, it might result to miss entry. Yeah. Because if you are using confirmation entry, if you are using aggressive, it means market has tapped into your zone, right? So you are just waiting, market will go your direction. But someone that is using confirmation, market can just tap on the PO high or your discount zone or premium zone and just go straight to the direction. I won't even give you any confirmation or whatsoever. You just be having miss entry back to back. You see that everything has its own pros and its cons. And that's how you become professional. You just don't trade anyhow, just don't trade anyhow, waste money anyhow, just blow account anyhow. If you are still blowing account in 2020, I don't know. It's weird, sha. Okay? Don't blow account, okay? This is new year. So let me go into the site and quickly I will show you an example of the confirmation entry and then we move into risk management. Okay? Are you good? Yes. Can you see my screen like this? Like my whole screen. Uh, where should I use? Let's use aid. See, when it comes to this particular confirmation, normally this is we have minor structure and we have substructure, right? We have minor structure and we have substructure. So it means on your substructure, this is substructure, example of substructure. This is the like bigger view, the macro view. Right now, we are all correct, right? This is retracement, and this movement here is the string structure. And the string structure creates what? It creates substructures. Are you with me now? Now, you can even mark your premium and discount with this substructure, right? It's applicable to everything. Can you see? It's still applicable here. And it's applicable to what? To the macro view also, and which is the one we did. Okay. Now, when taking entry, if you mark your premium and discount with the substructures, it has less strength compared to this bigger one. Like I always tell you, the bigger ones always dominate. Okay, so it means if you are using like this substructure to mark your premium discount and you're waiting for, because some of you will actually try to mark this substructure. So it's not like market is retracing and you want to come and mark your own this thing here and you want to no, this is retracement. Meanwhile, this is the string structure. So if you mark your premium discount here and you're waiting for confirmation, fine. Or you mark it with the bigger view and you want to enter the trade. Okay. Now, this particular one here, market has not even come. Let's okay, BOS there. Then let's apply our premium and discount. Okay, this candle week here. This is where it stopped, right? This is where the higher low stopped, and that's where my Fibonacci to also stop, right? From the higher high to the higher low. Are you with me now? Then we just mark out. We, we take our rectangular this thing. We mark it out, and then we delete the fib. Are you with me now? Now, aggressive. Because market did the break of structure here, he did it here, where this arrow break structure. And you're expecting market to retrace and tap into this guy here. This is aggressive. Just looking at the view, this you have a setup already, but you just enter the trade and market just tap on it, give a sniper entry, and then see the risk to reward, just small something like that. Not that big. Okay. Now, compared to let's delete this guy and go to is let's go to 5 minutes. No, 5 minutes, 5 minutes. Now, if you're going to 5 minutes, what you want to see on 5 minutes is markets giving you the potential that this particular trade is going your direction actually. What do I mean? We are bullish. You go to lower time frame. You want market to give you a bullish movement again. I don't know if you get that. Let me check. There's one message. Am I getting too fast? Okay, let me calm down. Let me calm down. Sorry, my strength is too much. That's why. This is what we marked, right? This was the first tap. Are you guys understand our PO high? Why is this network doing this? Sorry, my network glitch. Let's go to the 1 hour back again. This is 1 hour. Okay, I don't want to fast now. This is 1 hour. We have the break of structure. This is the body of the candle that did the break of structure. Okay, and then we have our discount zone here. Right? When market retraced to this extent here, and then it buy for a while, and then this was the first tap here. See the first tap. It means this first tap here, if you enter aggressively, market would have took you inside into the trade. You would have entered a trade with that with this small wick that tapped into your discount zone. You would have entered a trade straight away. But you didn't enter. You don't want to enter with confirmation. Can you see here, man? You can see my screen. Okay, good. Someone says, please do 15 minutes time frame. No, it's actually 1 hour and 5 minutes, this particular thing. Because if we go to 15 minutes, for the newbies, it might be hard for you to spot the confirmation I want to explain now. Like the bullish movements, market showing the trend. I can use 15 minutes to, and I'll be able to identify that this is where the break of structure happens. But if you want to see it clearly, 5 minutes will show you the trend very well. Now, this is what I'm saying. This is 1 hour discount zone. This was the first tab. We go to 5 minutes. We switch to 15 minutes to you will see how it looks like. Can you see? Now we didn't enter straight away there. Someone would have entered from this guy like this, but we didn't enter. We want to make sure that Market actually gives us the bullish movement that this trade is going bullish. Now, where was the last recent lower high that was created here? See, this is the break of structure here. Okay, let me just read this one. So now, what will I call this red line? If I want to see the fast lane here, what will I call this red line? This red line here, what will I call it? Market taking out this recent lower high. Good, 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 good. I think you guys are getting it already. It's actually a shift in market structure. You can call it change of character or whatever. But it's just obvious. It's just telling you that this particular thing is about to do what? Go your direction. This is the second, this is the confirmation you want to use. Okay? Now, what do? You have seen it like this, but where do you enter? Okay? You take your fib again, mark it from this guy, from the weak points here, you drag it down. You are applying your discounts again. What do? You mark it out. Then you have refined it. This was the first tap here. This is where I tapped it. And then did our 1:4 something. Even though I even tried to protect the stop loss very well. It did about 1:4. Compared to someone that used aggressive that would have entered from this first tap here. See the SA as the big. See the risk to reward 1:2 something. Can you see the difference? Should I repeat the scenario again? Kingsley is after you guys' life. You guys said no. It's really one opposing. So I won't take our time. I just want to, I will just do it brief because we still have risk management to treat. Okay. Let me recap. See, this guy is bullish. Okay. Follow me. This guy is bullish. We mark our break of structure from this guy here. We pick this particular structure. This is the structure we picked. This is the structure we picked. This is our higher high. This is our higher low, right? This is where the break of structure happens. You see this body, not this week, not this week break. It just starts where my distance stopped. This body is what did the break of structure, right? Now, you all know how to mark your fib. From this higher high to this higher low. Okay? Then you want to mark out from 50% to what? From 50% to what? To 0%. Then you delete your fib. Okay? We have a discount zone. But looking at this discount, see the way I zoom it now. When market break structure here and when market was retracing, the first tap was this guy here. Okay? If we go to, let me just mark this one that was the first tap. That's where market actually tapped it first, right? If we now go to 5 minutes time frame, 1 hour, 5 minutes, you'll be able to see the structure very well. That's why we are using 5 minutes. Can you see the first tap? Now, when market taps it here, let's say, for example, market has not created all these ones. Market was here. We just mark your structure. You are marking the lower time frame structure now. You want to see this guy take out a recent strong point that you can see. See, this is the recent strong point I can see right now, right? Because this is still a break of structure here. Let me just label it. Okay, you take your feed from higher high. Same thing we apply on the macro view. Now let's look at it at the micro view. Okay, now we apply your feed. Then you mark out your discount from 50% to 0%. You delete the feed. Can you see how markets come back? We trace inside this discount zone and then do what? This was the first step here. And then your SL, you always be about below the strong point or above the strong point. This is bullish. It's all the same thing. This is bullish. It will be below your higher low, your strong point, below your invalidation point where you expect market not to break. Because our expectation is the market should not take out what? Higher low. Then you protect it. But don't be stingy, not like you now do it so tight. At least give it a breathing space so the market will not just weak you out. It did about 1:4. Simple. Same thing if you are to look it from bearish angle. Market taps on premium zone, and then we have a what? A change of character here. Market retrace and then tapped on this guy. This thing is not hard. I hope you guys are good. Then we can move to risk management. Are we good? How do you know if this is 1:4? I will go. No, today is not for question. I'm just giving a random this thing. I'm not expecting you to grab it so fast like that. But trust me, it's the simplest entry mode that I can teach you right now. Now, we have spent about 33 minutes and we still have risk management to treat. And I'm trying so the video will not be long. And I noticed that so many people are finding it hard to watch videos. I will not lie. You guys are finding it hard to watch videos and finding it hard to watch. You won't be able to learn some things and you'll be asking questions that I don't understand, I don't understand. So we'll be using this guy. Can you see my this thing? Can you see the file? For that person saying this, I will use another pair in the night. You didn't use liquidity in your this thing. We can't use all those trend line liquidity that I explained to you. We can't use all those ones. When you learn inducements, you know the application where to use them. This one, I didn't even apply all those ones at all. And it works very well. Now, risk management. Risk management protects capital from large losses. Protects capital from large losses. Now, when we are talking about risk management, See, as a trader, regardless of this thing, whatever you have learned, whatever you have did this thing and the likes. If you do not understand risk management, you can blow your account. See, we have so many good trader houses, like they are good when it comes to technical, like very good. But some of them lack this aspect. See, this thing is break into three aspects, this trading aspect. Okay. The first one is your technical head, the second one is your risk management, and then the third one is what? Psychology. Okay, psychology. Just look at it from that three different levels. Now, first one is your technical aspect, you being able to analyze the market very well. Second one is what? Your risk management. You should be able to manage your trade, manage your money, position sizing, how much to risk per trade, stop loss and take profits, dividing exits and entry points. Okay? Now, you must understand your risk to reward. For the newbies, I will take it gently. You must understand what we call risk to reward, because that's actually the power of what we are doing. It means It means if you have, let's say, $100, that's like a basic entry, like a basic capital at least that you can have at least, right? Let's say you have $100 and you fund your $100 account. Now, you went to your WhatsApp. Let's say you are waiting for a trade or a setup. You didn't see any setup. You will see that risk management and psychology, they work hand in hand. Psychology is not what you are thinking, the way you think, the way you feel. Are you with me now? Just the way you think, the way you feel, and how those feelings and thinking affects your trading decision. Are you with me now? All those your feelings, your thinking, your emotion, how you now apply all of them to your trading. That's what psychology does. Okay. Now you went to WhatsApp, you now see someone did $100 to $1,000. You now like, hey, really? $1,000 to $1,000. Meanwhile, you yourself, you know this $100 is your last money that you just funded. Some might even borrow it. You know, and I don't even know the kind of spirit that will enter someone's body. And you now think you can do like Merlin. You want to go and do your own too. You, if you mistakenly blow that money, the first thing is that you have messed up yourself. Okay, you have messed up yourself. Like psychology aspects, you have messed up yourself because you feel like Merlin. You think you want to go and do it too. You just build the account. So that kind of people, I have those kind of traders that they have seen their this thing, they will now be like, trading is some gives up very fast, like very fast. They gives up like, this thing is not my way. You see a lot of them saying trading is scam, trading is betting, is not different from this blah blah blah. And like me, I read all these posts for fun. I just read and smile and just scroll and go my way. Okay. I have nothing to do about it. Okay. So if you blow your account, the next time you fund again, you'll be very, very afraid. So even execute $10 trade, you fear because you are human, you are emotion, we are very sensitive to money. Are you with me now? We are very sensitive when it comes to money aspects. You'll be so afraid to even place a $10 trade because you don't want to experience loss. And trust me, one way or the other, you have to just accept that fact. See, when you saw a trade, see, I'm treating risk management and psychology at the same time right now. When you when you want to enter a trade, there are three possibilities. See, there are some things that I'm saying that I might not even remember. There are three possibilities that might come out. Fourth thing, market go your direction. The second one, you take a loss. The third one, you have a miss entry. So now I have a setup. I'm having three understanding that this setup that I want to take, this particular entry I want to enter, three things might happen. So those three things will now tell you that you should risk what? Risk wisely. Because you can go other direction and didn't go your direction and you'd stop loss. That doesn't make you a bad trader. Doesn't mean you are not good or you are not good with technical or whatsoever. Okay, so if you put all those things into consideration, you can have a missed entry. Someone like me personally, if market refuse to tap on my entry, like maybe a few pips, and it just miss entry, I will never, I repeat, I will never follow that trade. Like I will never do what we call fear of missing out. I will not try to, because I hate what we call current market price. Different trader with different preference, like different this thing. Okay, I hate current market price. I love limit entry. Limit entry is that you place your entry like by broker. This entry, I'm entering gold at let's say 2,000. Current market price is gold is fluctuating from 2001, 2002. You just place a current market price. As at that time that you place your buy order or your sell order, that's where your broker will exactly execute that your trade for you. That is current market price. But limit, my risk is calculated. Everything is calculated. If it taps on your entry and it go my SL, it's what I calculated I'm going to lose. And the TP I calculated is what I'm going to have. Okay, so that's what I know. That's what I do. See, it is better you learn from others. See, I love learning from others' mistakes. Even newbies. If I look at what these newbies do, I might not have faced that kind of thing before. I'll just, what did you do? This okay. I'll just put it in my mind that hey, I won't repeat this kind of mistakes because we are always learning. Okay, you should always be open to learning from all this thing. Me, I'm not doing like I know it all or anything. I always humble myself to learn anything. Okay, what's this? What is that? So that I will learn from others. I learn from other mistakes. I don't want to make several mistakes, and that's how you grow. Okay, you must understand how to manage your risk. You must understand when you want to risk. You know, there are some times that you will be like, I want to risk. Like you want to risk. You know that this money might go. So you are risking what you know that you can afford to lose. Not something that you will lose will now throw you into depression. Okay? You should place a trade and your mind is free. Not like you'll be checking your trading view 1 second, 2 seconds, 3 seconds. Are you with me now? If you are checking your MT5, checking your Bybit every seconds, checking your distance for my okay for newbies now. For newbies, if you maybe you place your first trade, you are seeing $10 profit, you are seeing $50 profit. You'll be so eager, you'll be checking your distance. If you see any small retracement like this, let's say you are seeing $50 profit, and that's your first profit as a newbie, you'll be so glad. The market just retraced to $30. There's the way you will be, your heart will be pounding. You'll be like, hey, this seems like this thing will go by. See the way I'm explaining as if I'm narrating a story. That's how it happens. So if this thing is about to happen to you, you will know that Steve have said this thing. You'll be like, this thing has retraced to $30, or I should close. If you see $15, you will start feeling bad. You start doing this thing, all those kind of things. Meanwhile, market doesn't move like you never see market move like this. Market just moving like this. No, because this is how markets move. If market go your direction, let's say it's give you $10, it might give you a retracement, and you'll be having like minus or plus $4 again. Market will go again. You'll be on $6 retrace. Like it'll be whining you up and down. So if you keep checking your trade, you will trade with emotions. Now, what are the things that can happen? If you now close that particular trade, you saw it went to now from that, let's say it has now went to $60. That's the peak. And now you have a drawdown back to what? $20. Because of fear, you now close. You close, right? Market now go your direction later. You even calculated it and it was showing you $200 that if you haven't have closed, this is your TP, $200. Throughout that day, trust me, you won't be happy. It's not a cost or anything. You won't be happy. Because you feel bad that why did I close this thing? See, that is another trap waiting for you again. Why did I say so? The next time when you are supposed to act, when you are supposed to act, when you are supposed to break even, you will leave it. A market will hit the stop loss if you want. See, I'm telling you newbies experience because we are in newbie space. So I'm coming down to newbies level so that we rub art with art so that you guys will know that I know how you will feel. Okay? Okay? So those kind of if that thing happen, problem has started. Your psychology, everything has been messed up. You know, you feel like your technical is not even working again. With that, problem started. You start moving from one strategy, moving from this one, moving from. Meanwhile, you might need someone to sit you down to. Some of you just need some good counseling so that uh you will get some things right. Some traders they have good technical edge. I will ask them, like, let's say maybe mentee that I train. I'll be like, where's your trading plan? No trading plan. What are you doing? How do you track your movement? How do you track your this? You are just trading, just analyzing. How do you guys do this thing? Because this forex market, I told you the participants in the forex market, they are professionals. They don't trade anyhow. They have their documents. They write down everything they do or whatever you get. Not that you're just trading randomly or anything, something like that. Okay, I don't want to waste much of our time on the psychology aspect, but these are the things you might face. I'm just telling you so that the psychology aspect, it starts from your risk management. Trust me, one way or the other, it's what triggers our psychology is loss. You can argue what triggers our psychology. All traders that are get finding it hard out there, what triggers their psychology is what is loss. Because if there is profit, even if you don't know how to analyze very well, and there is profit, and everything is just profit, what's psychology? There's nothing like psychology. You are just making money now. But immediately loss comes into the view, there is problem already. So one loss, two loss, those things should not stop you. There are times that me, if I hit stop loss today, if I hit minus $500, I will be smiling with you. You will not even see it in my eye. No way, no way. No, there's a way. I told my friend, I said, I was like, Gabby, I don't know. I just, I'm like, something has become part of me. Like, I don't react to losses again. Like, I don't know. It has, like, how do I put it? Like, my emotion has balanced with it. Like, I don't react. I don't react, with losses again. Like, I don't react with it. Like, once I have a loss, like, I'll just there's a way to just eat your heart like, huh? Why this one? Like you just move on. I'll just take my time back testing my technical edge, looking at it, what went wrong and the likes. Then we move again. But some of you will start reviewing your history, looking at the loss. If I have do this one, if I do this one, if I do this one, if I adjusted my stop loss, if I see if you should know some things, list your trade. Give it like you have analyzed. Leave it. Let market do its stuff. Not like market, you set your stop loss to $20. Market is approaching your stop loss. And the next thing you can think of is, I think there's a way, I don't want to waste our time with, because there's a lot of experience that if I start explaining, um, but I hope you guys do not learn anything hard way or whatsoever. I pray for you guys. You want to make mistakes. I personally, I made mistake, like a lot of mistakes. Mistakes. When I was trading memes that I don't even know anything what we call technical. If there's anyone that has been so long here, when I was trading all this shit coin, there's what we call safe mass, safe moon cash. Is it fake? Or I don't even want to know all those things. When I was trading all those things, all those shit coins, those ones, I think I was in church that day. that that $10, I think, uh 20, I don't even remember that year. That $10 was not easy. Oh. I funded it on Trust Wallet. I was using I've forgotten all this is it the apps or whatever. We buy BNB. We now convert the BNB to shitcoin. I forgot all those things. You will see your $10 crash in your high like this. $20, $50 will crash in your face. You see you everywhere with like you see you'll be seeing your quantity, the amount of shitcoin you bought, and everything will just disappear. Maybe a dev rug pull everybody. All these things is applicable to technical aspects also. So you see all those kind of things, all those kind of experience damage a lot of traders. It's damaged them. But as this thing damage, it makes people strong. You read, see, you read books. You read books. I went. Oh, thank you, Pancake Swap. That's good. See, I read some books about risk management, about money. I'm telling you, where all these things, it's not just one day this thing. That's why some people are finding it lazy to do some things. I'm telling you, it's not like everything is just rosy. Like you just start packing money like that. It's not as how you just pack money like that. It's just that you see people that can lay down good foundation for you. I'm jealous of newbies right now. A lot of newbies right now. You guys are opportune, like someone that can doing our own time. Hey, when we are still learning as a newbie, the hand that meets me, I personally, the hand kind of hand that meets me, can't even explain it. Okay, so those kind of things, if you are not strong, you don't have a what we call will, what we call zeal. That see, you can't stop me. You look at your back and you're like, no, I have to make this money. I have to do this. I have to do that. I will read PDF, motivations about money, how to manage your risk, blah blah blah. There's this trader that has this voice note. This thing I forgot this name of this. That's for his voice notes. The voice notes are so long. A lot of them. I listen to everything. I listen to everything. So such that sometimes if I wake up the next morning, I will feel so tired. My eyes would have swollen, would have red. My dad would tell me that, see, because it's Yoruba, would be like, oti just scam me. They have scammed me my money. Like he knows nothing about the crypto, and I will feel bad. You have waste your money because those times I was struggling very hard to gather money and everything will just go. Do you know how I feel very bad back then? And I was like, I can't settle for less. I keep going, I keep going, I keep going, I keep going, I keep going. Okay? Those things is what builds what we call strength. Is what we call strength. And trust me, see, as I'm saying this thing, I'm saying it with happiness. It's not like I'm just saying it so that you know that there is light in front of you. I'm saying it with happiness. Back then, I have cousins that those ones they are into I'll say call it fraudulent activities. Like I don't where they are spending money, I can't even put like they are junior brothers to me. They're just like, bro, come and do this thing. But me with my this thing, I know I don't have the heart to execute all those things. Like I'm always afraid. So they're like, I'm wasting my time. Like they tell me back then that I'm wasting my time. I'm not using it to rejoice over them, but where I'm doing some things now is they no they dare not. It's so funny. Most of them are in group. Come and teach me this. Come and teach me that. I will just smile. I will just smile because back then, if I were like, I think this thing is not working because just read. You just be reading. This thing is not easy. You will watch most of the things newbies are facing. You guys will be like, you learn the video finish, you go to the chat, you don't understand. See, I have been there. You will watch video finish on Telegram. You think everywhere is good. You go to Trading View, you are confused. I remember sometimes back then, yes, I messaged Mimi. I don't understand. Though. I will watch this thing. I would everything. I don't understand the. I don't understand again what happened. I watch videos. I'm confused again. Okay, so when the newbies complains that I watch this, all I can do is just encourage. Just try to replicate charts. Like what I would tell you is that try to copycat what someone like a good chart. Like just use that particular pair and try to do what replicate it. Okay. So I will spend like 10 minutes more to explain this risk to reward, and I think we had the I believe I was able to explain few things. And now risk to reward. See this thing. You see this under this forecasting and measurement. You see what we call long and short. Long means buy. Okay, if you want to enter a trade like a on an uptrend, you use the long position. If you want to sell, short position. These are forecasting tools. Okay, now look at this thing. It will be so fun that don't want taught us all these ones. We just go to trading view and start doing nonsense and then till we understand. Well, like we did nonsense till we understand it. See, okay, see. This green means from this, you see what the line that separates this green and this red is your entry. This green zone simply means your profit zone. Starting from this entry upwards are your end like profit. So from here you will having like plus, let's say plus $2, plus $3, plus till your take profit. Maybe your take profit is $50. Then your stop loss, maybe your stop loss is $10. You'll be having like if market is going against you, minus one, $2, $5. The market gets your stop loss minus 10. If market gets your stop loss, your broker will take you out unless you don't set your stop loss. You must set your stop loss. What does stop loss means? Stop loss means stop my loss. SL. Stop my loss. You must always use stop loss. Don't even argue with that one. Use stop loss. You should not even start with those kind of simple mistakes that we now start whining you. Always use stop loss, your entry, TP, stop loss. Even if you forget this TP, see this SL, just set it. Because anything can happen in the market. If your stop loss is $10 and your equity is $50, if you didn't set stop loss and let's say market has approved your stop loss $10 and you are like, this thing can still go my direction. It's bullish now. You just you just do it like this everywhere bid. $20, you can you be like you still have equity. Trust me, you can adjust it to $50. Market will still blow everything. Market does not really send anything. Don't adjust your stop loss. Know your entry zone, know your exit zone. Okay? See in the middle of this thing, see where the rise risk to the world. You can see it's changing from 2.5, 2 point this 1 point something, blah blah blah. For the newbies, this is what we call risk to reward. Okay? That is what we call risk to reward. I've explained pips, all these targets, all these ones. I've explained this one. But this risk to reward. Look at this guy now. 3.09. Let me just put it like this. 3.09. This simply means 1:3. If this is your entry, you enter a trade here. This is your TP. Take profit. And this is your what? Is your stop loss. It means if your stop loss that if market gets to this zone here, you'll be losing $10. Okay? At your entry here, you'll be having like zero, like equilibrium. You are not losing, you are not making profits. That's where you enter. Okay? Your TP will be what? If your stop loss is $10 and your ratio is 1:3, what will be your profit? The newbies, just do it. It's just simple math. See, I'm trying to make it interactive. Okay. It's actually $30. It means you are risking 10. Do you get that? You are risking 10 to get what? To get $30. If your risk to reward is 1:4, 1:4, you are risking what? $10 to get what? To get $40. So now, how does this work? Let's say you funded $100. You now divided your capital into 10. That is, you are going to analyze 10 times. If all your 10 trades, your 10 analysis, everything is stop loss, that's when you can lose your account. Okay? For you to lose 10 stop loss, like hit 10 stop loss, you still have works to do. Okay, you did your first analysis minus $10, you take a loss. Another analysis, you hit stop loss. Another analysis, to the 10th one, everything you hit stop loss. That's bad. Okay, how does the risk to reward works? How does it work? Now, you have $100. You divided everything into 10, right? It means 10 trades. Do you get that? Hope I'm not fast. If you may assume that you are assuming that you can have 5 stop loss. If you have 5 stop loss and you have 5 TP, that is out of your 10 trades, 5 might go against you. 5 will go. That is 50% win rate. For those that don't even understand what win rate means, there are some pros that don't even understand. They're just putting win rate. It means how you win consistently now. There's nothing wrong with that win rate. Some are even putting it somehow. You have 10 trades and 7 out of it ETP. That is 70% win rate. You have 10 trades and all the 10 trades ETP. That is 100% win rate. Win rate means how consistently you won your trades. Okay? Now let's assume you. So that's why you should not stress yourself too much. Like, don't even kill yourself that you want to turn to Merlin on the chart. If you assume that you are going to hit 5 stop loss and you are going to hit 5 TP, okay, you would have assumed that maybe your first trade CP, second one stop loss. Markets fluctuate up and down. Some things will happen. Now, your 5 trade that's going to hit stop loss is what? $50, right? $50 minus $100. How much are you having left? $50. Are you with me now? Now, the lowest risk to reward, I will advise you guys, when you analyze, the lowest risk to reward should be what? 1:3. Lowest. That is, you are risking $10 to get what? To get $30. Lowest. Then, if you are good enough, you start increasing it 1:4, 1:5, 1:10, blah, blah, blah. Now, let me come down to the newbie aspect. Let's say 1:3. 5 trades, let's say 5 trades as this stop loss. They can go in each other, maybe first loss, second loss, like not like loss will just come as 5 at once like that. You get now $10 times 4, times 3. That is $30 on 1 TP times 5, right? That is $150. The profit you have $150. You still have $50 balance left because if you enter a trade, you use $10. It's not like your $10 has gone. It's still in your equity. So your $50 is still there, plus the $150 total profit you made. You have how much? We have $200. How much did you fund? $100. Now you have how much? You have $200. You make $100 profit plus 100%. Plus what? 100%. Even if you put your money in bank for 1 year, they will just put one annual distance. That annual distance is scam because the amount they would have charged you before the year ends, you won't even see any profits. This is just an example. Compared to someone that is using 1:3 For me, I like 1:5. The minimum I can go maybe 1:4. 1:5, 1:7. 1:5, and let's say 7 CP. For example, let's just $10 times 5. Let's use 1:5 times 7 trades. You are with 50 with what? How many dollar? With $100 capital. You know, that means you are winning 7 trades, you are losing 3 trades. You are having $70 left. Because losing three trades means you are losing $30. Are you with me now? So the $70 balance left plus the $350 you make, how much is that? $420. Risking less. Risking less. You are risking $10. $10. Now, even if you're afraid, you can still reduce your risk. Maybe you reduce it to $5. But you know it might take you some this thing. But $10 I think is fine. Okay? Do you guys get that? I think we are almost uh uh this thing. Our time has gone. Our time has gone. For that person asking break even, this is what break even means. This is break even. You entered here. Let's say market has moved to this extent. Let's say your this thing is 1:4. Our market has moved to the middle point. You are having in the middle, you'll be having like plus $20, right? Meanwhile, your TP is $40. But market being here at plus $20 for you, market can still reverse and hit your stop loss. That is, market didn't get to your TP before it reverses. So now, for you to be on the safer side, your stop loss, let's say your entry here, let's say we are using good. Our entry here is 2000. Our TP is 19, let's say 1950. Let's just use 50, that 50 points like that. 1950. And our TP is what? 2000 and 2000 and 2200. Okay, our entry is 2000. Our TP is 2200. Our SL is what? 50. So our TP is 1:4. Our SL is 1. Are you with me now? So now you adjust your stop loss from 1950 above this 2000. Your stop loss on your broker is what? 1950. So you can adjust your stop loss to 2000 and let's say 2001. Around this place, securing about $10 a year. Okay, you are adjusting it above, let's maybe to 1:1, securing $10. So if market reverse and taps on this place where you have adjusted your stop loss, you'll be having plus $10. But market has took you out. You're out of the trade. Because market can still come back to your entry and later go the direction or go against you, which means you secure your position. That is what break even means. I think that would be all. My voice is already seasoned. I think we have used 1 hour plus. I won't compress it. My voice is already seasoned. So that will be all, guys. See you all tonight.